Hello everyone. In this video, I want to talk about how to identify some type of a point of interest in the market. If you want to be a trader, you have to understand that a higher time frame it's more the pattern that you identify in a higher time frame is more relevant than a pattern that you discover on a lower time frame. All right. So if you are talking about a lower time frame, we are talking about like a 5 minutes, 15 minutes, 30 minutes, and then you can never compare the 1 hour time frame to 30 minutes. The 1 hour is most higher than 30 minutes. Same way, 30 minutes is higher than 15 minutes, right? As you can see on my screen, right where I'm pointing at right now. So we have here 15 minutes, we have 30 minutes, and we have 1 hour, we have 2 hours, we have daily, we have weekly, we have 4 hours, right? So as a trader, it is depending on the type of trader you are, all right? So as for me, I'm a day trader, and I always try to do my analysis right from the weekly time frame. I'll start identifying my zone. All right. I'll go to the weekly time frame. After I go to the weekly time frame, I want to see the bigger picture. It means that when we're talking about a weekly time frame, so it means that if you put your chart to the weekly to 1 week time frame, so it means that each candles each candle that you see on your screen, it represents 1 week. Mean that 1 week that candle forms, opens and close. It can open on Monday and then close on Friday as a forex trader. All right. So if you are trading any other pair, like let's say Bitcoin, it's tradable. It's tradable. It is tradable throughout the week. I mean, from Monday till Sunday, it is rollover. All right. So if you are trading, that is if you are working with Bitcoin. So me as a forex trader, my trading does not really base on only on Bitcoin. All right. So I trade gold and I trade other pair also, and also Bitcoin I trade it, but not really all the time. All right. So as a trader, you have to know which pair do you trade, what currency do you trade, or what do you trade, Bitcoin or whatever, Bitcoin, US dollar, or Euro US dollar, or whatever, or gold US dollar, whatever you want to do. All right. So after that, we want to what we want to do is identify the key zone. So the key zone, it is one, like there is one we call a fair value gap. Fair value, fair value gap. As you can see all right on my screen, I write here fair value gap. All right. So what is fair value gap? Fair value gap, it is a first to identify your fair value gap. We need to identify the trend of the market that we are looking at. All right. In the market, we usually have a movement like this: a higher high, higher low, right? Higher high, and then we have higher low. All right. Higher high, and then we have higher low. So this is our uptrend. This is called an uptrend. Uptrend. All right. So when you identify this uptrend, so where is our fair value gap coming from? You see, this is what we are having on my screen right now, right? This exactly thing I draw right here. This is what we are having on my screen right now. All right. This is what we need to see. So every time we have this type of such movement in the market, we want to try and identify a leg that broke the structure. Like here, this is one leg. This is a leg. This is what I mean by leg. All right. This is a leg. Another one. This is another leg that broke above, that moved above, that created the high. A leg that created the high, a new high. This is another one. All right. So we need to identify this leg. All right. See those. This is the leg. So those legs usually form something that we call a fair value gap around here. around here, around such area, we usually see a fair value gap. A fair value gap, it is a leg that broke above, creating a new high. Then the candles usually form a space, I mean, like imbalance in price. All right. So, what is an imbalance in price? Let's look at this a scenario in this year right now. So, it might be very difficult for someone to identify, but uh, it is if the more you study, the more you try to figure all these things out. All right. Now we start. Let's say from here. Let's say from here we discover a break above, breaking above this one, right? Then we have a retracement, all right? Then we have another break above, going higher. So now, this leg, this leg, as I indicated before, this leg that broke this structure that go above, so the fair value gap, it is right here. Now, look at this candle from the place that it can from the beginning of the leg that broke the structure above that created the new high. We want to see one, the first candle, the bullish candle, and the second bullish candle, then the third bullish candle. We have to identify that three candles. So that three candle usually form the space in between the first candle and to the third candle. The first candle and to the third candle, we want to see that there is a space. There is a space. Look at here right now. Look at it here. Look at this candle. This candle, the first candle, this is the second candle, and this is the third candle. So what happened? The wick, the wick, the wick, the wick of this first candle and this third candle, they are not touching each other. They are not touching each other. Look at here. From here, from the bottom of this candle, and then to the high of this candle, we can see that we have there is a space in between. Unlike this other one, the same thing happened here. The same thing happened here. Look at this candle, and then this candle, this first candle. We see there is a space in between this first candle and this candle, then this third candle. This is what we call the imbalance in price. This is what we call imbalance in price. So what happened? This imbalance in price usually tends to come back to fill that gap, to come back. That is why we have this retracement. That is why we have this bearish, this red candle coming into that level. After coming, filling that gap, it will come to the gap. After that, then the price will have another displacement above. All right. So look at it very well. You can see, and the same thing happened here now. The same thing happened here from this candle, then to this third candle. We see after this displacement above, this candle form a fair value gap. This is the place that we call the fair value gap. Sorry, the fair value gap. This is where we call the fair value gap. All right. This is what we call the fair value gap. Okay. The fair value. The fair value gap. So that is the place that we call fair value gap. That space. The space that it is an imbalance in price. All right. So that is why we see this bullish candle. It came lower first, filling out the gap that this candle was created before, that this candle was unable to fill before moving higher. Then this one was also unable to come to this area. So then this bearish also refused to come to this area at all. But before the price continues, this bullish candle came here first, came into that gap. We can see it clearly, right? This candle, bullish candle, came into this gap to fill that gap first, then before displacing higher. So this is how we identify our fair value gap. All right, so it is better to go to the higher time frame. You go to the higher time frame, like weekly. You can go to your weekly time frame or daily time frame. If you go to the weekly time frame but you did not see anything, then you go move to your daily time frame. We can see this is the place that we mark out before. We can see the way this candle, those bearish, now this is what we see as a bearish. You can see now this bearish. So that is the reason why some people, when you see the candles, that they are, you will see a bearish market. You will see a bearish market, that the candle are going bearish. You will not know the reason why the candle are just, or the market are just selling. So these are the type of the reason why market continues sell. Okay, this is the reason why if you go to the 15-minute time, we will see that this play that we mark out, these candles like that, because this is the daily time frame. But if you go to the 15-minute or 30-minute or 15-minute time frame, you will see that this candle is not only 3 candles. It's going to be a lot of candles. It's going to be a lot of red candles, which is going to be a bearish candle. So that is why most of people, you will start trading, you will be expecting to buy, you will want to go long, then you will be just seeing that the market start coming against you, coming, and the candle might continue selling. The market can continue to sell for days or for hours. So these are the type of the reason why, because why the market was tend to come and fill this gap that was created on the higher time frame, eh, that the market want to come and fill that gap. You see now, after touching to that zone, what happened? The market started buying, going higher again. Can we see that now? So if you go to, I will go and show you the same thing happened here now. You can see this bearish now, they come to that gap, filling that gap before going higher, before moving up again. So the same thing happened here. So market tap into that zone. So that is the reason why whenever you are in the 15-minute time frame, you are using 15-minute time frame for an example. For an example, let's move to that 15. Where is this? This is 15-minute time frame. So the market is going to create, is going to be very far. Look at it now. This is the place. Now we can see right here now. These are the place that we saw on the higher time frame. You can see. So this is the reason why, if you are buying from this place, if you are going long on this place now on your 15-minute time frame, if you are using 15 minutes to do your analysis, or you are buying from analysis from 15-minute time frame, now you look at all this displacement. Look at it. Can you see all this long move? Sorry, we can see all this long move like this. Imagine if you were selling, or maybe you are buying. If you are buying, if you say you are buying from here now on a 15-minute time frame, you can see now, this is the reason why the market continue buy, it will continue selling. That you can see this one bullish candle that you are seeing. These are just only ordinary retracement of inside the downtrend on the lower time frame. That is why you usually see one bullish candle in a downtrend, that you see red. You can see red. That you only see one bullish candle, but because that is a lower time frame. When you are using a lower time frame to take your trade, this is what happens every time. That is why you make losses. So until when you don't you don't learn to use higher time frame, like 2 hours, 1 hour daily time frame, weekly time frame, or 4 hours, to do your analysis, so that you can identify all these type of zone that you can draw a market. So that is why they call this area like that. It is called a point of interest in the market. So until when you start identifying this zone on the higher time frame, before you can be able to trade and take it in, take trade and the trade turn giving you a winning trade. Until then, the market, you will not make a good reasonable amount of money in the market. All right, this what I'm saying right here, it is applying to all type of market. If you are trading Bitcoin or you are trading future, you are trading whatever that you might be trading, this is what this is this works for any type of the market. So you just have to identify the place, this type of place. You can see you identify it on a higher time frame. You have to go to the higher time frame to identify this place. All right. When you identify it on the higher time frame, then you can now go to your lower time frame to take your trade. When you identify something, you have identified the point of interest on a higher time frame, like your fair value gap, order block. There's what we call another thing. We call there's an order block, but that order block we are going to talk about it in my next video. So I just hope that this video is going to help you identify. You can start using. Go to your chart now, right now. Go to your chart and try to figure. Go to your 1 hour. Go to 2 hours. Go to use. You can even start from 4 hours. If you don't even want to go to weekly or daily time frame, go use your 4 hours time frame. When you use your 4 hours time frame, use your 4 hour time frame. You are still going to see the same thing is still going to happen. Look at it. This is what I mark out on a date. I mark this place, this yellow zone. I mark it out on the weekly time frame. But even on a 4 hours time, we can still see it here. This is the these are the candles. Look at it here, right here. These candles. When you discover this candle, you can see the distance between this first candle to this third candle. There is you can see this candle is bigger than all the rest of the candles. All right. So this candle, it is what we call the fair value gap. This is what we call the place the space between this first candle. Let me write it here. This candles is our first candle. Is our first candle. This one. All right. This candle is our first candle. First candle. Let me put it below so you can see it. And then this is our second candle. This is our second candle. And then this is the third candle. This is the third candle. All right. This is the third candle. So go to your chart, go to the 4 hours or go to your daily time frame. Then you try to figure out this thing that I just put on my screen. This from the first candle. When you see a candle, a big candle like this, that it's forming this candle, this third candle is not touching this first candle. Normally, look at it, unlike these ones here, unlike this one, look at this one here, this one, and then this one. And they are not the same. You cannot compare it to these ones. You can see. Let me look for another. Look at this candle, and then this candle. You can see that we can have the rejection, the week. We have the week of this first candle is touching this third candle. All right, you can see they meet each other. They meet. Look at it. You can see they are touching each other there. They meet each other here. All right. So unlike this one, they are not meeting. This third candle and this first candle, they are not meeting each other. They don't meet each other. So that is what we mean by a fair value gap. All right. So go to your chart, go to your higher time frame, identify this place, then you mark it out. You can mark it out like this, putting any line to identify it. So then you wait. You can wait. You can see the market go all the way, then came back later came back to that place to fill the gap that was created here. You can see that gap. So that is what we call the fair value gap. All right. So when you can take your trade from here, you can buy from, if you after mitigating this level, then you can take your buy from this level. Then you can ride the trend. You can see how higher the trend goes. You go your way. But when you buy from, you you can buy from here. If you buy from here, it is better than when you buy from here. If you buy from here, you don't know that there's a fair value gap here. Then you can see that the market come against you, that you just see the market continue selling. You will now be raising that. Why this market just selling like this? Why the market just going selling? Why is only coming out red candle? What is the reason? It's because of those imbalance plays, all this balance in price. All right. So I hope this video just help you guys. So if you have any question, just pay me up and or DM me or ask any question. Then we are going to talk. And even this one also the same thing. This is my analysis for today and for next week. I've already I've done my analysis for this week. and then I'm waiting for next week. So this is what is going to be my, look at it here, another one that I just marked out for today. A mini point of interest. You can see on my right on my screen, mini point of interest on the higher time frame, which I discovered on a 2 hour time frame. So I just mark the zone, then I mean the discount, and then the premium level. So this one we're going to talk about it in my next video, guys. So I just hope this video help you. And then if you have any question, please, guys, don't hesitate to DM me. All right. So I'll be very, very, very glad to help. And then so I hope this video help you guys. So cheers, guys, and peace out.